Good morning, everybody. Welcome to the Premium Members Live stream. Let me get you pulled up here so I can see your comments. Give me 1 second here. See, we got 3 of you in here already. There we go. I'll be able to see your comments. Whoever's in here, just type in and let me know who's here. It does not show me who's here unless you type a comment. Good morning. Good to see you. We got just a few minutes here before the market opens. And we'll obviously watch the market open first, and then we'll start looking at some other names, looking at price action. If you have any questions about anything, the unbiased trader, I know you were asking me about what setup I used to take that trade this morning. Oh, I don't have the mic on. Thanks, Steve. There we go. You should be able to hear me now. Good morning. Good morning, Sonny. Nice to see you. So can everybody hear me now? Hopefully everyone can hear. There we go. Yeah, I just didn't have the mic on here. On me. It was on, but not on me. Awesome. So the unbiased trader was asking in the room this morning, and I don't know if he is on here or not, what my setup was to take that scalp this morning. My setup this morning was the gray range, the box. So what I did is I took, when we had a sharp break out of the box, right? Okay, it's like a breakout trade. When we had a sharp break out of the box on this candle right here. Yep, I'm going over it right now. So when we had this sharp break, it was this candle. When we had that sharp break out of that box, that's what triggered me to go short. Now, my actual target was clear down here, 24.49.75, because like I told you this morning, if we could break out of here, we were likely to at least make it down here. Now, what happened, and I was lucky, when I say I was lucky, I was watching, obviously. As soon as price started to stall and turn around, I exited. I was up $100 in profit because I was literally watching it in real time. I was on Tastyworks, and it shows you, your real P&L as you're trading. I was up $100. By the time I could literally hit close position and close the position, it had already went down to 62.50 because it was reversing. Well, obviously what was occurring was the news of the ADP employment was coming out, right? And so it came out as better than expected, and it caused it to spike back up. And then that's kind of why we've been in this area. I still think we're probably going to go ahead and fade down to at least here, if not lower. But we'll see, right? We'll see. We've had this strong move down from clear over here, right? That was 26.0275, right? And then we came all the way down, and this has been our low, which is 24.67. Right, so that's like almost $130, right? Since 2:30 yesterday. Okay, so here we go. So I got to remove my opening price level up here, and then I got to add it over here. So we opened at 24.74.75. 24.74, whoops, 75. Now I've got all kinds of alerts that are going to probably go off, but most of them aren't going to be valid because they were inside candles and they're going to be gaps way below where the inside candle was. All right, 24.74.75. Okay, so let me get this open. Let me put this level in and then we'll get going here. Give me 1 second. Get my opening price level marked. There we go. Okay, so we're going to see here what they do. We've had this significant move down. You guys can probably hear those. I got alerts just going off like crazy, but like I said, most of those are because of big gap downs below the inside candle. Okay, so we'll see what they do with this initial move. But again, just so you guys know, I see there's 5 of you on here now. That trade I took this morning was on the breakout of this gray box range. So from 2 a.m. until clear over here, we had just been ranging, other than spiking out these wicks, spiking out a little bit. But more and more traders come in as the morning goes along. We got this sharp breakdown here. I believe I had my alert set like right under this wick, I believe. And I entered. It came down here. I was up $100. I bought way out of the money, as you guys could see, because the premiums are ridiculous. And when it got down here and it just started stalling, it was just sort of moving up and down between about a $2 range right there. I immediately went in because I knew what was probably about to happen. So I come to Tastyworks, your trades, it'll show you, and then I immediately tried to put in close, because all you got to do is click. It'll say close position. You click on that, and then you send the order. And in that amount of time, it went from 100 to 62.50 in profit because it was already reversing. Okay, so that was the setup that I took on that trade right there. Okay, so here we are right now. We just barely poked our head down, and then it's come up, still just hanging out right here around opening price. Okay, so we'll see what it wants to do. Now, like one of the alerts that went off, we'll look at a couple of these. One of them was AMD. Yep, see? I'll show you. See this huge gap down? Let me go to the daily. And let's look here. Trying to remember why I had that alert set. Now I don't even remember why I had it set. But there was this huge gap down. I had it set for a reason, but I don't know why. But a lot of these alerts are going to be because we had these big gap downs. I had like 3 or 4 alerts just go off. I didn't even see all of them. But if we go through, you're going to notice most of these names, we'll come back to the market here in a second. You're going to notice most of these names are going to have pretty significant gaps down. This is Apple, right? So it closed up here. Here's where it's opened right at resistance. AMD we already looked at. Right now I'm on the daily, but I'll go back to the 30-minute here in a second. Okay, here's Amazon. Okay, closed here, gap down. Now it's right in between support and resistance, so it's got room to run either way. Let's look at BA. I believe BA had a significant gap down, but we're going to check. Okay, here's BA right down here. Ended up here. Again, it's right in between, so it's got room to run either direction. I'm just going through some of these quickly because almost all of them are probably going to have gap downs. Yep, so it ended yesterday up here, opened up today down here, has tried to come back. Okay, and then it's right now it's kind of hanging out right here at the 20. Baidu is going to be similar, so let's go to Biogen. Okay, Biogen ended up here, gap down, it's trying to move up. Again, you come over here, look at the advancers, clear down at 152. All right, we know that's because of all the names. I'd venture to guess 95% or more of the names gap down this morning because of the market being significantly down. There was a couple of names that were flat. They were gold, so let's go look at those real quick. Let's see what gold's doing. Okay, the gold names were flat. This was pre-market I'm talking about. All right, so look, it kind of opened flat, just down a bit, and it's moving up, and it's actually up. It's only up 28 cents. Okay, let's look at gold GLD. So over here, flat. See that? Flat. All right. And let's just look at a few more. Let's look at Google. This is all daily. Google, gap down. IWM, small caps. Probably going to see a gap down. Yep, gap down. You see this on all these names. We just keep going through. Microsoft. Gap down, but it's moving up. Look at that. Okay. Pretty significant gap down, but it's moving up. Gap down about $5. Down to here. And it's already from open to where it's at now, it's already up over $3.20. Okay, so that's Microsoft. So on and so forth. Let's go back to the market for a second. Let me switch back to the 30-minute. Todd Father, I believe you're on. I saw your message, and that's okay. That's okay. I know what you were saying there. Okay, so now we're moving up. All right. I didn't set an alert before we left. We've come up to the 20. We're taking out these wicks right here, and look at this. Look at the setup we have right here. Look at this setup. Okay, if we could get over the 20, it could probably at least get up around here. If we can get over the 20. Right now the 20 is acting as resistance, but look at the setup. Once we've cleared these wicks here, we've got this nice little setup. Diagonal pattern, small to medium wicks. Okay, we know that if we could get over this, we might be able to get up to around here. If we'd clear that, we'd be looking at this wick over here. Okay. And then if we cleared that, we would be looking up here around 25, 21.50. So far, haven't been able to get over the 20. And we're still very early. We're not even 10 minutes into this opening candle. We're not even 10 minutes into this opening candle. Let's look at oil. Okay, now oil's funny because, you know, everybody was amazed at, you know, how oil fell, you know, during this economic crisis. And now there's this big divide over whether oil's heading up or whether it's going to continue down. So I know one of the guys that is one of those bold predictors yesterday pre-market, he was saying oil was going to take this huge bounce. And I mean, he had it like going up big time, big time. I think his first level was like $24 and something, but obviously that's not what happened, right? So if we go back, okay, that's midnight. moving through here. And then that is probably, okay, so this was overnight session. So he was predicting that back over in here somewhere. This was yesterday, so it was over here. Yep, so it was over here. He was predicting we were going to take this huge bounce. Bottom is in, and he had it going up, but he had it like in waves going up. And his like first wave was like up to 24 something. Well, obviously, you know, we have supply. It came up into it. It bounced. Caught some support here on the 20. Came up again. Heads back down. Okay, so look at this. Nice strong up. Base, drop, rally, base, drop. So we formed some supply there. We know we have, this is not the best demand zone, right? This is not the best. We had a strong candle down, no base. Okay, I don't really like these that well, but then we had the strong move up, which shows there were definitely buyers here. So I went ahead and drew this in. Okay, but since we came down from here, look, we're just ranging. We're just ranging. This is oil. Okay, oil futures. Now, we know if it starts moving up or down, okay, it's likely to catch either resistance up here or support down here. So right now, unless something drastic happens, like if there's some agreement worked out between Russia and Saudi Arabia, if there's an agreement worked out, can oil spike from there? Absolutely. Okay. If nothing happens and we get more bad numbers on oil, could it break through here and head lower? Absolutely. Okay, but barring something like that, it's probably going to kind of be stuck in between here for at least the near future. All right, so I just wanted to point that out. You know, again, when we see these people making these big, bold predictions on Twitter about anything, up, down, whatever, take it with a grain of salt. Do your own analysis. You know, we already had this up here, so I knew it was not likely that we were going up to like 24 on oil on one move. Okay, and it bounced down, came over here, really kind of put in a double top. See that? Okay, kind of double topped, and then it came down here, and now it's just kind of been ranging. All right. Okay, so that's oil. Go back over to the market here. I think we're still moving up. Let's see. Nope, still here at the 20. Still here at the 20. That's the obstacle that we got to get over right now if we're going to get more upside. Okay, because we have the potential. The potential is here. We get over this, we can get up to here. Okay. Then if we would get over that, we could get up in here. And if we cleared that, we could easily make it up here. All right. Hopefully everybody can see that. We'll stay here for just a second. We'll see if it has the power to get over the 20 or not. We're on the 30-minute. We are on the 30-minute, but you can see the range we were in. Again, from 2 a.m. till about 8 o'clock. Then we got that sharp spike down. Man, I was really, I'm just telling you, I was hoping that the news was going to be more as expected. I didn't want it to be worse. Okay, we know it's bad. And I put in the room, hopefully you guys seen that. The news, when they said it's better than expected, you have to factor that with a grain of salt because those numbers were only calculated through March 12th. Today's April 1st, right? So that's almost 3 weeks ago. We know that all the damage from an employment standpoint has happened since then. Okay? So that's why the numbers appear to be better than expected. It's because they're not factoring in. Remember the last jobs report? What was it? I'm going off memory, 3.228 million filed unemployment claims. All right, that's all been since the cutoff date for the ADP employment numbers. Okay, so they're not factored in there. Okay, we're still rejecting off of the 20. Just can't make it over the 20 as of right now. All right. Now, am I interested in anything on ES right now? If the 20 wouldn't have been here, I probably would have wanted to go long when we took out these wicks right here because of this setup. All right, but because of the 20, that made me a little bit nervous, and so far I would have been right. You know, we're rejecting. Doesn't mean we can't come back here and gain strength and go again, but right now it's rejecting off the 20. Okay, so that wouldn't have given me, see the top of this wick here, that is 24.90, and this is only 24.94. That's only $4, and I would have had to buy significantly out of the money to get any value, right? I can't buy at the money with these premiums being as ridiculous as they are, so you got to buy way out of the money to get any value, and a $4 move isn't going to give you anything. It's just not going to give you anything. So for me, the reward to risk wasn't there to take this trade. If the 20 was like up here or we were already above it, man, that'd be a perfect trade. Get over these 3 wicks right here, and then you got boom, 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 boom up to here. Now you're talking $14, $15 move. That you can make some money on, even buying out of the money, especially if it happens quickly. The quicker it happens, I'm talking about from an option standpoint, the quicker it happens, the more money you can make, right? Because options go up exponentially the quicker the move is. You don't want the move to just be a real slow move. You want it to go up fast. All right, so if, I'm just giving you the scenario, if this 20 wouldn't have been here, I would have looked to enter about 1 or 2 ticks above here, and I would have looked to exit a couple of ticks below the top of this wick. That would have been my target based on this setup right there. Okay, these candles with these small to medium wicks in this nice diagonal formation. But the 20 has been the resistance. It's pushed it back down, and that's where we're at currently. Okay, so let's go look at some other things. I'll do this. I'll set an alert above. As normal, my Thinkorswim is like molasses. When I'm on Tastyworks compared to Thinkorswim, it is night and day. Tastyworks is just like everything's almost instantaneous, and especially at like market open, like I just said, it's almost like Thinkorswim is in glue. All right, so I've got an alert above, and then I'll set an alert below. Let's do this. And then we can go look at other things, and we'll be alerted if price starts to make a big move one direction or the other. All right? All right, so let's go down and look at Tesla. Just I'm picking stuff at random, and we're going to see if we find any setups, if we see anything that catches our interest. Okay, so here's Tesla over the last 4 or 5 days. All right, sort of moving down, but at the same time very choppy. Very choppy. Had the big gap down. Almost, not quite, almost filled the gap, and now is pushing itself back down. All right, and here's where we would probably have our first area of resistance, would be the 200. Okay. Then if it would get below the 200 in this wick here, it would be this wick. And if it cleared that, let's look to the left. Yeah, if it cleared that, because it's pretty much in line with this over here and this over here. Okay, so if it cleared the 200 and then cleared this, it'd be an almost virtual certainty it would fall to here, 476.75. All right, so Tesla had an inside, sorry, we're on the 30 minute. We're on the 30 minute. Okay, I was gonna say it had an inside candle, but we're on the 30 minute. Let's look at the daily real quick. Let's see what it did yesterday. Yep. So we didn't have any kind of a signal. All right, here was the little move it made down over the last few days. Yesterday it came up to the 20 on the daily, pushed back down, and then this morning it gapped down. All right, so that's Tesla. I'll go back to the 30-minute. And again, I'll just show you real quick. All right, so here's what you're looking at. If it came down, if it got below there, then it needs to get below here. And if it gets below there, then you've got a pretty easy path down to the 476.75. All right, so we'll probably come back to that. Let's look at Walmart while we're down here. Okay, Walmart, here's where it ended yesterday. Big gap down. We've already pushed up, and it opened at 112.15, and it's been as high as 113.72. Okay, so that's about a $1.50 something move this morning. Decent on Walmart. That's a decent move. All right. We'll just work our way back. Let's look at Twitter. Now, early, you may have noticed in the room, I said usually around 10:30 is a good time to start looking for potential price action trades, high probability ones. You give the market that first hour to play out, you can start looking at the hourly chart like you would look at the daily chart. So you would see, did we have inside candles on the hourly that you could then try to play for scalps? Okay, so you would go through your list, whatever your list is, and we'll look at some stuff when we get to 10:30. Okay, but once you get through that first hour after open, you can start looking for hourly setups like you would look on the daily. Inside candles, hammers, shooting stars, those kind of things. Supply and demand can be anytime, right? That can be anytime. All right, let's look at shop. Then after shop, we'll look at Roku. All right, here's shop. Okay, gap down, and it's going lower. Because where did they gap it to? Right under resistance. Tried to go up, it couldn't. It caught resistance, and now it's flushing down. 406, 395. So this is already an $11 move. Okay, $11 on shop. Shop moves, right? It's going to be a little bit more expensive because it's traditionally volatile anyway. Even in a normal market, shop is volatile. Another room that I used to be in the past, lots of people used to play shop in there because even in normal low volatility conditions overall, shop would move 20, 25 bucks a day. I mean, it's just, if you like volatility, this is a name, right? I mean, just look over the last few days. Look at the size of these candles and the drops and, spikes up, drops down. Okay, gives you the opportunity, if you like to trade in a volatile environment. Shop is one of those names that's just traditionally volatile. Okay, Roku. I'm sure we're going to see a gap down. We did, right? So here's where we ended. We gapped down, tried to come up, could not fill the gap, came down, caught support at the 200, and we're in here now, still red. Okay, from open, so it's trying to push down. Let's look to the left. If it gets through here, all right, if it gets through there, it's basically clearing this wick. And then from there, should be an easy drop at least to this support level. If not, and I have an alert set already, if not, down into demand. Okay. All right, Steve, Uber. Yep, let's take a look. And then we will go to Nike after that. So let's go to Uber. Not something that I normally trade. I have been on this chart before, obviously, because I have some levels. All right, here we are in the 30-minute. Big gap down. Let's go to the daily. Okay, because Steve said we had an inside daily candle. which we did. Okay, the only issue, again, is we gapped down fairly significantly from where the close was. That is the one thing with inside candles that you have to be careful of on the daily. I think I talked about it a little bit either yesterday or the day before. If you gap up or you gap down significantly, you have to be careful because you can't trade it the same way. Now, if it opens up inside of this candle, that's when you're going to trade it, right? That's when you're going to trade it if it takes out a high or it takes out a low. But when you gap down outside of the range of the candle or you gap up outside of the range of the candle, it takes off the normal inside price action play because you don't know for sure now what's going to take place. Is it going to come back and try to fill the gap? Okay, so far it hasn't, right? But look, it's trapped right now. It'll break out eventually one direction or the other, but look where it's trapped between two levels here. Okay, then it's got the 20 right below here. This is on the daily chart right now. Or it's going to start to come back into this range. And if you see that, then that's something to note because then you would look to see if you could take out the top. And if it's on one candle, that would be what? That would be a single candle power reversal. And if it takes out the top here in enough time, and what I mean by in enough time, if it would take out the top here and you still had time left on the day because you're going by the chart that it happens, okay, then you could look for a move to the upside. Where? Well, probably at least up to the top of this candle. And if it broke through there, you see the top of this wick is fairly close. If it broke through there, you could maybe even get up into this range. Now that'd be a big day. Is it unprecedented? No. We got a big candle here, got a fairly big candle here, got a fairly big candle here. Okay, but you would not want to take that trade unless it took out the top. So let's do this. So while we're here, let's just look at the overall bigger picture. Now this is the first day of a new month. So really all we have to do is look at the weekly. Well, let's look at the monthly. I mean, it's the first day. So you don't put too much stock into this right now. See? It's going to be the same as everything else. Okay, then if we go to the weekly, it's at least going to have a few days of action. So the first week of a new month, you really don't put much stock in the month, right? Because it's going to be the same or slightly different than the weekly. Now on the weekly, look, we're pushing down. Here we are halfway through the week. All right, right now with 2 days to go, we're forming somewhat of a shooting star here, but we have 2 days to go. Okay, this is on the weekly, but we got this nice bounce off of this trend line. Man, I haven't been on this chart in a long time, and it's still respecting this trend line. I can't tell you the last time I was on this chart. Okay, bounced here, came up, now we're moving back down, but we've got 2 days left in the week. And then we were already on the daily, so let's go to the 30-minute. Okay, Sonny, give me 1 second and I'll talk about that. Let me finish up here. All right, so there we got that significant gap down. This is the 30-minute. It tried to push up. It could not get through this resistance here. Then it came down to this support, and it was holding there. We were trapped. Now it's trying to break below. You got this wick and this wick over here. Okay, these are your next areas if you were looking to go short on Uber. Okay, you can get somewhere in this wick here and catch some support and maybe get a bounce. If you somehow cleared it, then you got to get through this wick, then the 200. All right, so that's your look on Uber. All right, and okay, Sonny. Okay, wait. Sonny, let me go to Nike, and then Sonny's asking, what is the significance of a new month? All right, so we'll talk about that as we go to Nike. Okay, Nike, significant gap down. Okay, tried to flush down. There's support there. Now it's bouncing back up. Okay, seeing if it can take out the top here on the 30-minute. Big gap, though. That's a big gap to fill. Remember, your rule of thumb is that if it starts that way, it's likely to try to maybe get to 50. Then if it starts to go the other way, it's probably not going to fill. If it gets to 50 and can somehow break through there, your odds go up that it may fill the gap. Okay, and we're going to look more in depth. Let me answer Sonny's question here. So monthly, when the new month begins, just keep this in mind. On the monthly chart, it's not as significant that first week because it's not going to be much different than the weekly for one thing. All right? It's the start of the second week that you start really paying attention to the monthly. Now, the way things shook out this month, the monthly ended and started in the middle of a week. Okay, sometimes it's going to start at the beginning of a week, just like the weekly. In that case, it is the next Tuesday that you would start paying attention to the monthly. You understand that? If the weekly and the monthly start on the same day, on a Monday of a new month, you don't even really need to pay attention to the monthly until the Tuesday of the second week. Why is that? It's going to be exactly the same as the weekly, right? So it just doesn't carry as much weight that first week. It's not that you can't look at it. Okay, we did end opposite. The weekly and the monthly are going to be different, but the monthly really needs to have about a week or so of action before you can start gauging what it's truly doing. That's a much higher time frame, right? It's taking into account about approximately 30 days. So you don't have much basis, right? If you're doing a test on something, you're not going to make a conclusion. If your test needs to run 30 things, you're not going to make a conclusion on just 5, right? You want to let it play out a little bit, and then you get a better picture of what the monthly is doing. Okay. All right. So Nike, here's where we're at here. Let's go to the weekly, because now, just what I talked about, we really need to look at the weekly and the daily. Okay. So here we are on the weekly. We had this big drop. We caught support, huge bounce right up here to this level, right up here to this level. And now we've caught some resistance. And today, at least, or excuse me, this week at least, it's selling down. All right, kind of trapped in between these two levels. And again, this is a chart I have not been on in a long time, and look how it's still respecting these levels. I'm going to say I haven't been on Nike in at least several weeks, maybe longer, and it's still respecting these. All right, now let's go to the daily. Take a look at Nike on the daily. Okay, so we had an inside candle, but what was the problem? A significant gap below. So that takes away any high probability trade off of this inside candle. The best possible scenario would have been if it would have opened almost flat and then went. Okay, those are the best kind of plays. For one thing, they're easy, right? If you're opening near the top or near the bottom of an inside candle and then it starts going the direction, okay, so like this is a red inside candle, and if price would open like right there, let me make this bigger for you, and price would open like down in here and then start going red, okay, you get triggered right there, and then look what you have. You kind of got a nice little setup. You know, you wouldn't like to see the 20 there, and obviously right here it caught right where the 20 and support came together. But I'm just giving you that scenario. Those are great trades. You almost don't have to do any thinking, right? You open low on a red inside candle and it starts to go. You take that out, you take that out, you take that out, and then you would probably get down into here somewhere and catch some support. Okay, so those are what you're really looking for. Like when I think in the notes I talk about that. Even though you have inside candles, there will be opportunities that are better than others. So that's where your common sense comes into play. So you would look, right? Okay, on this red inside candle, are we opening here? Or are we opening kind of 2/3 or 3/4 of the way up here, right? Because the momentum had already started to move down. Now, okay, now it's going to take it longer to get down there, right? And then when you get down there, do you still take it? Yeah, you can still take it. But is that as good a play as if you find it on another name and it's exactly the opposite? You got the same setup on another name, but you open up right here and you start to go red and you take that out immediately. That's a better play, right? Because you can get in and catch more of the move, because you don't want to get in up here. Let's say, let's say it opens here and it starts moving down and you're like, yeah, I'm pretty sure it's going to go down and I'm going to jump in. Then you get all the way down here and then price reverses and starts going the other way. Okay, you don't want to open in the middle of a candle. So that's what I mean about some inside candles are better than others, and it depends on what they are and where the open is that next day. If you're looking for an upside play, you want it to open up here, right? If you're looking for a downside play, you'd want it to open up here. On this, you would have been looking for a downside play, so you would ideally want your entry, your opening your opening to be down in here, like the lower, say 20-25% of the candle or lower. And then you take it out, you can get in and you can catch a bigger part of the move. And again, we've got the 20 here, but imagine the 20 wasn't here. Then I would start saying, yeah, we might have a chance here to make a nice move down to at least in this area. And that would make it worth it, right? Take out the bottom here at about 82.30. And then if you made it down, well, even if you made it here, right? That's $4 move. Okay, so that's Nike. And then DocuSign. DOCU. We haven't had any alerts go off on ES, so that's why I haven't went back to check it. That means we're still in that opening range right now. All right, here we are. This is the 30-minute. Okay, DocuSign, look at this. Not as big a gap down as some of the other ones. Went up, okay, tested, came down, caught support. Again, how many of these names are we seeing trapped in between two support and resistance levels so far? Right, quite a few. On the names we've already looked at, a lot of them trapped in between support and resistance. And so is DocuSign. Let's look at the daily. Well, we'll start with the weekly, then we'll go to the daily. Okay, where are we at on the weekly? Green, but we've already been up here and kind of pushed back down, but we are green. Okay, this isn't considered bearish yet, right? It wouldn't be considered bearish unless we started to form a shooting star. Okay, so green on the weekly, although we have bounced down. Now we'll go to the daily. All right, so there we were yesterday on the daily. That's close. I mean, I don't think that's quite a shooting star. I don't think this wick is more than 2 times bigger than that. Okay, but that's close, right? And then so far today, we're inside. We've been up to resistance, down to support, and we're right in the middle. Okay, so not really much to do on DocuSign right now. We'll go back to the 30-minute. Okay, here's the 30-minute, and we're just kind of trapped. Just sort of trapped right there. Okay. Just for you guys, because I just got an alert on an email. I had a friend of mine recommend TradeStation. He knows I'm looking for a new broker, and I'm trying to find something where I can trade everything from one account, including forex. Now, they're not exactly that because they don't do forex, but they do forex futures. So you could still trade forex. You would just be trading the forex futures, which, I mean, I'm fine with that too. Forex futures, they say, are typically a little bit better for day trading and scalping. But anyway, so I started looking into it, and I watched some videos. I looked at some reviews. comes pretty highly regarded. They claim it's a great platform if you're an active trader. You know, I'm obviously an active trader. Great platform. It's robust, yet it's pretty simple and easy to use. It's got good charting software, which a lot of other brokers other than TD Ameritrade, not many of them have good charting software unless they're using TradingView in place of their own or something like that. So I start getting a little bit more excited. I'm like, okay, well, maybe I'll try to demo this thing for a while. So I reach out yesterday to the customer service department at TradeStation. I'm on hold for over an hour. Then when I get on, some girl named Vivian, I think her name was, or Viviana maybe, I start asking questions and she couldn't answer anything. And she's like, I'm going to have a customer relationship manager, I think that's what she called it, reach out to you via email. I'm like, I've been on hold for an hour and now you can't even answer my questions? You're supposed to be a customer service rep. Oh, well, such and such a person, the relationship manager's name is Jennifer. Jennifer will be able to answer your questions. So, and I told her, I'm like, I want to talk to somebody. I don't want to have to go back and forth through email. This was yesterday afternoon. She just like literally hangs up on me. But I do get an email from the customer relationship manager. And so I ask my questions. This was all yesterday afternoon. I'm going to say between 2:30 and 3:30, something like that. She's just now responding to my email. And then between now and then, I've looked up a bunch of stuff. They don't support Mac. I use Mac. Okay, so you have to download other software that allows their software to run on a Mac computer. I read some reviews on that. They said it can get a little glitchy. There was a couple other things. Now, I was sort of depressed because I love the functionality. Again, very robust platform, but yet simple to use. You can trade pretty much everything. You can't trade what they call spot forex, but you can trade forex futures. So anyway, you know, I'm probably not going to be able to find one single platform. Interactive Brokers has it, but that was a disaster. So I didn't even bother continuing on with them. So right now I'm still using Tastyworks just to take some simple trades. I just have a little bit of a money that you guys already knew that thrown into an account with Tastyworks because I'm still kind of feeling them out. But it's just not a very robust platform, and they're geared towards option and spread traders. And I like to trade everything. I trade those, but I like to trade everything. And I know a lot of people who are in this business, and nobody's been able to give me anything really, good. Now, if I did not use Mac products, TradeStation would probably be pretty good. They recommend, I think they recommend using like a Chromebook for running their platform, something like that. But it's all Windows based and not iOS. So anyway. Yeah, Sonny, for sure. I mean, that's why I'm using it, right? I'm still using TOS for charting and analysis and stuff like that right now. As we're watching it, look at DocuSign trying to make a move. It's breaking out of this area. It's clearing this wick, okay? So it's breaking out. That's somewhat of a hammer right there. So right as we're talking, it's sort of breaking out. Probably can get up to at least here. If it gets through there, you notice that's where it bounced down. If it gets through there, then it could get up to here, all right, which is around, let me see, around 95. Okay, so just as we're talking here, I wasn't even paying attention. DocuSign is breaking out to the upside. But there's your targets. You get over here, which it hasn't yet. Okay, when I say get over, it's got to get over and clear it. It got up to it and it pushed it back. Then it would have to get over this little thing, which shouldn't be too difficult. However, it is sort of a little drop, base drop. Okay, so that gives it a little bit more strength as resistance. If it gets over there, it should be able to get up to the top of this candle at 95. Okay, that's DocuSign. I just had an alert go off on the market, so now we've taken out one of the ranges. I think it's to the upside. Yep, to the upside right here. Let me squeeze this in. Okay, so we took out this wick here where we'd come up. Now we're above the 20. Now we've got this nice little setup. We should be able to get up somewhere into this wick. Okay, maybe about right there, 25.03. Okay, fairly easily. We should be able to get up to around there. Right? Okay, so moving up here. We'll just kind of watch it. I'll leave my little cursor there so you can kind of see. I would think it should be able to get up to around 25.03. And you guys, I want you to notice, why would this wick, besides the fact that it's bigger, why would this wick be important to get over? Why would it maybe offer more resistance than, you know, potentially some other wick of a similar size? Okay. It's because it's the start of a fairly strong move down. So not only is it a decent sized topping tail, it was the start of a significant move down. So that's why you would give this a little bit more credence that it may offer more resistance than maybe another wick of similar size, right? Because we're taking in the overall context. We're taking in the overall context. Not only was there selling pressure right here, it was the beginning of a strong move to the downside. Okay, so far, just kind of watching it here. So far, it's still hanging out there. Watch it just for a minute or so. You got it, Al. Lots of selling, right? Lots of selling. And again, there's a lot of traders and there's a lot of teachers out there, people that have their own rooms. They'll say, ignore anything that's happened in the past. I think that is a total mistake. Total mistake. Because the past can tell you what's likely to happen in the future. Right? In our real lives, we don't ignore the past. Right? I mean, so why would you do it in trading? You know, but I know trust me, over the years, I've pretty much seen it all and heard it all and have had friends that, you know, and I do have friends that are one way or the other. Some, I think, put way too much credence in the past. Okay, I think you give it its due, it's actual, it's real, it's true. All right. And then there's others who give it absolutely no credence. They believe once something's happened, you don't ever worry about it again. That I don't agree with. Okay, price sort of stalled out right now. Okay, it really stalled out right about the top of the range. Okay, so that makes sense, right? Because this is a structure level right through here. When you have a range like this where it came down, flattened out, and then dropped, that's a structure level. So it would make sense right here at the top of the box is where it stalled out. Which is in this wick. And we know once you're in the wick, price can either stall or reverse at any time. It doesn't have to get up to any specific point. It can happen anywhere in there. Okay, so the top of this box is in the wick. It's about, 25, 30% of the way up the wick. And that's where it caught resistance, which is also confluent with the top of this structure here. Okay, Al, you're talking about ES right here, that it might be coming up and then maybe going to bounce and try to go lower. Is that what you're saying? It may be. I mean, I said at the beginning, before we ever started, I don't know if you were on here or not. I mean, I believed that at some point today the market's going to go lower, but that doesn't make it true, right? I don't predict anything. That's just a feeling, right? But I don't trade off of that. Like, I'm not going to make any trades because, saying that I think the market may still go lower. That's just like more of a gut feeling than anything. Yep. Okay. Let's squeeze this in and then we'll go look at some other stuff. All right, so like I said, look up here. Okay. Up here, we sort of triple topped. 1, 2, 3. Okay, sort of triple topped up here. I'm not really into triple tops, but that's sort of what we did up here, right? All I'm really saying is this level was pretty significant. The 26, 30, 50. Look how it was respected. Okay, and then this third time we sort of rolled over right here. Came down, structure, down, structure, down. Come over here, structure. Okay, now I do want to point out something. This is a much smaller scale, but remember when we first started the market correction, what did I say back then, those of you who are with me, that was odd? And it was something to take note of. Remember the structure. This is how structure should look. Down, angle back up, down, angle back up. Okay, but then what did we do? Down, based, down, based, down, based. You see that? The flat structure. Remember back when the market correction first happened, those first however many days, let's say week and a half. Remember me pointing that out? I drew all the gray boxes to show you how instead of coming down and angling back up and then going lower, it was dropping flat, dropping flat, dropping flat. And I told you, you want to look for things that are out of the ordinary. Okay, now this is a much smaller scale. We're only talking about a couple of days. We're on a 30-minute chart. Okay, but I'm not going to ignore it, right? I'm going to look at that. I'm going to say, now wait a minute. This is what structure normally looks like and pretty much kind of should look like. But then, flat here, and now flat here. 3 in a row. 3 in a row. So it's just something to keep in the back of your mind. It's something that's out of the ordinary. Something that's out of the ordinary. And as of right now, okay, still has respected the top of this structure level. And we have less than 7 minutes to go on this candle. Okay, we'll come back. I'll set an alert here. Set an alert right here because I do want to look at some other things. Because what I really want to do is I want to look at just various things, and we'll look for some price action type plays. So we'll come back. All right, let's just check a few things on the way. We'll see if anything jumps out at us. We're almost to 10:30 too, right? 10:30 is the end of that first hour. Say Apple, not doing much. Big gap down. Right under resistance, tried to come up through, couldn't, and now it's just sort of flat. Okay, it's almost like I get the feeling the market is in this pause right now. Okay, we got the move down overnight. All these things have gapped down, and now I feel like it's just sort of, okay, all right, are we going to let it fall off the cliff and just really plunge even more? Or are we going to start maybe putting in some consolidation and then try to go back up? We'll see, right? We'll see. Okay, advancers have went up, but not significantly. Remember, we opened up in the 150s. We're around 247 right now. So that means that about 100 more names were able to at least fill their gaps. Okay, they're positive compared to where they ended yesterday. But that's still a lot that are down. And we know it's because of the significant gaps down. All right, AMD, let's see where it's at. Nice, okay. One of our free members, he's been inviting all kinds of people to the room. He's probably had, I'd say at least 5 people join our free community that he's invited. He likes how we teach in here. He's been in a bunch of different rooms, and there's rooms that he likes, but he thinks the way they teach makes it difficult for people to understand. So he's been like inviting all his friends to come over here, which is pretty cool. All right, here we are on AMD. Okay, there was our opening candle. Nice hammer. Okay, now obviously we weren't in here when that candle closed, but right there, look at that scalp. Right? That's a price action play. Significant move down, hammer right off of the 200. You take the trade right here above 44.68. So you take it about 44.70, and probably your first target would be right here. Okay, 45.78. So that'd be a dollar move. Your T2 would probably be up here, top of this candle. Right? That's AMD. So that was a perfect price action play. We just happened to miss it. I can't look at everything. You can't look at everything. That's why you pick out some names you like. You mark as many as you can. If you're looking for scalps during the day and this is a name that you play, you see something like that to develop, you're ready to go, right? You're ready to go. You take that. Yes, Sonny. I mean, that's gorgeous. It doesn't get any better than that. So we were kind of having a discussion last night. I can't remember if it was Kelsey or who was asking me. Somebody was asking me about, the best plays or the strongest plays. And I said pretty much the absolute best are going to be like when you get these strong moves to a hammer. Okay. Now you enter here and then look at the kind of move you get off of it. Or vice versa, exactly the opposite. Strong move up to a nice shooting star. Okay, this is a great hammer. Why? That wick is at least 3 times as big as the body. You want the body to be small. Okay, you want the body to be small. It's got a small body, doesn't have too big of a topping tail here, wick. You enter up here. You easily make it to T1, and now you're even looking at possibly getting to T2. Right? Look at that. Here, we'll put an alert up here and see if it makes it. Okay, but this is what you're looking for. Okay, right here. Right here. I mean, if you guys take a screenshot of that, this is the kind of stuff you're looking for. That's beautiful. It's perfect. Yep, hammers and shooting stars after these kind of moves. After these kind of moves. Strong move. Doesn't necessarily have to be a trend. It can be, right? Can be, especially if you're looking at maybe a bigger time frame or you're going back several days. But just this right here, strong move. Okay, this has happened over the course of about a little over a day. Okay, strong move. We get the nice hammer. The only way this hammer could be even better is if it didn't have that wick at all, right? I'm just telling you from a technical standpoint. The only way this would be better is if it didn't even have that wick. But other than that, this is about as perfect as it gets. Nice wick I like at least 3 times the body. The book definition of a hammer is the wick needs to be 2 times the size of the body. And the body needs to occur in the upper 30 to 33% of the candle. Okay, that is the textbook definition of a hammer, right? I like the wick to be about 3 times. It's just some added significance to the probabilities of how it's going to play out. Okay. All right, you see that there? Okay, this is where the candle ended at 10:30. It's moving its way back this way a little bit. I wouldn't put too much credence into that. Okay, typically when a candle opens, it might move one direction or the other a little bit, and then it'll go. Okay, after a big candle like this, though, we may end up with a resting candle first. You may, right? Okay, but we got 29 minutes to go. So I've got the alert set. If that alert goes off, we'll know we would have hit a T2 if that's a trade that you would have taken. All right, let's keep moving. Amazon. But that's what we're looking for. That's why we're doing this. We're going to go through these names and see if we can find some good price action potential setups. All right, now here, this is a good one to look at because I want to show you something. Again, when we say that not all inside candle trades are created equal, this is definitely an inside candle. We're on the 30-minute, nothing wrong with that. You can trade this setup on any time frame. But this would not be as good an inside candle setup as some, only because of this taller topping tail, right? So we gapped down, we tried to push up, and sellers came in and pushed it back down. If we take the top of this out, does that mean we can't get up here and take this out? No, not necessarily. But the probabilities are that this is going to be much more difficult to get through to the upside, right? If we took out the bottom, okay, that's still a decent size wick, right? But if we took out the bottom, is it easier to take this out or to take this out? Just from a strictly probability standpoint, it would be harder to take this out. Not impossible, but we're looking for the best trades that we can take, right? Okay, so it still hasn't taken it out yet anyway, but that's where, when I say that there are some inside candles that are better than others, okay, this is one I would look at it, and if it does take that out, I don't know that I would be thrilled to jump into it. That's me. I'm not saying you couldn't take it. Okay, I'm just telling you and giving you my reasoning. Oh, there's our AMD alert. We already hit T2. That quick. That quick. Okay, so we just took it out. Remember, we had the alert set at the top of this candle. We've already taken it out. Let me squeeze in a little bit more, make it easier for you. All right, so we've already taken the top of that out. So this would have been your T1, and that was good for over $1. And then this one, I think we had it at 46.44, and it would have been from 44.70. Okay, so that's almost, that's like $1, what, $1.70, something like that, up to there. Okay, now it's catching a little bit of resistance. That's why, you guys already know what I'm going to say, that's why I look to enter here and not up here at the top of the wick, right? So we would have been out. We would have hit the target, we're out, okay? And then it went a little bit past that, and then it pulled back. Now, will it continue up? It might. But this makes sense from a conservative standpoint, right? This makes sense that maybe that's a good T2. T1, T2, you take your money, you start looking for the next best trade. Or, if you're super aggressive, you maybe scale out here, and if you have some left, you know, I'll make something up. You have 1,000 shares, you sell 500 here, then when you hit T2, maybe you sell 250 more, and then you ride 250 and see, hey, maybe I can get up to at least the 20, right? Okay, so I'll set another alert at the top of this candle. We'll see if we can get up a little bit higher or not. Okay, but I'm conservative, so I'm looking to get my money and get out. Get my money and get out and not let something reverse against me. All right, let's look at, well, just since we're here, here's Aussie CAD. Okay, still trending down, right? Lower low, right off of demand. lower high, lower low, lower high. Then we ranged. Okay, then we broke lower. Right? So now we're going to see, is this just going to be structure and then continue on down? So train your eyes to see this, right? Here we go. Lower low, bounce out of demand, lower high, because it's lower than this, lower low, because it's lower than this, okay? Lower high, because it's lower than this, lower low, and then we started to range, right? I could probably draw a gray box right around this in here, then this would have been your breakout, right? That would have been your breakout right there. Let me draw it just so you see it. My eyes, when I look at a chart, like I just imagine, I can see it, right? I don't even have to draw it in, but I'm going to draw it in just so you get used to it. Okay, make it gray. You guys always know gray for me means either structure or range, and in a lot of cases it's the same. Okay, there you go. See that? Okay, so then that gives you an additional opportunity because you can try to play a breakout. You can try to play a breakout out of the range. So here was our structure, moving down. Okay, moving down and then into the range. Then we got the sharp breakout. You're looking for a sharp break. That's a sharp break, okay? Probably would have entered maybe somewhere under this wick here, knowing that you still got to get under these, but see how they're in a diagonal formation? Okay, see that? How they're in diagonal? So if you take this one out, it's likely you're going to go ahead and take these two out too, and of course it did. All right, let's look here. Would this even been worth a scalp? We'll see. 86.04, 85.60, you probably would sell on the way back. 85.72, so that's 28 and 4, that's 32 pips. Heck yeah. Heck yeah, I'd take 32 pips. That's an awesome scalp. That's an awesome scalp. Okay, so from the bottom of this wick to the bottom of these two candles, right? Because when it started to reverse, you're going to go ahead and get out. Okay, 30 some pips. That's awesome. All right, here's Aussie Swissy. Remember, the Aussie pairs always look very similar. So here's that same kind of move, right? Okay, down, then we chopped a little bit right here, back up, down, back up, but we're going lower. You see this? Even when it was choppy through here, it's still going lower, down, and now sort of ranging right now. It really hasn't broke out of this. Really hasn't broke out of this. It was sort of ranging right through here, but then it did break out. Came up, came down, right? All right, so we're just kind of looking at a few of these things. Let's look at BA. We'll jump around and look at both equities and forex. Okay, BA trending down, gap down, came back up to the 200 and relatively flat. Okay, relatively flat. Not doing a whole lot. Let's look. We did not look at Baidu last time, so let's look at Baidu this time. All right, look at Baidu yesterday. Big move up and then sold off the rest of the day. Gap down and it's moving up. Okay, so it's one that's showing some strength, right? Like AMD, it's already filled the gap. So this would be one of our advancers, right? We opened the day in the 150s. We're now up to almost 300. This would be one that increased this number because it filled the gap and it's above now. So it's advancing compared to where it closed yesterday. Okay, not really a hammer. That's not really a hammer. I probably wouldn't have taken any trade there. Plus, you're fairly close to a resistance area. You don't know for sure that it's going to break through. All right. What else? Let's look at crowd. I don't think we've looked at crowd today. All right, crowd. Look at the range crowd has been in. Okay, poked its head down. Now it's coming back to retest. Is it going to re-enter the range, or is this a break, retest, and go lower? Okay, see where we came from? Up, into supply, bounce down, back up, bounce, back up, bounce. You see this range here? If I drew, I'm not going to draw this one, but visualize it with your eye, right? Big gray box right through here. Then you're waiting to see, are you going to get a sharp break? That was not a sharp break. All right, but we came down, we've come back up. Now, is this a break, retest, and go? Or are we just going to re-enter the range? Those are the types of things you're looking for. Let me do this. Let me squeeze in because I see something. Oh, I thought I saw something. Never mind. Okay, this was really a spinning top. I thought it was a hammer, but it's really a spinning top. Okay, but it was after a sharp move down. Take out the top here. Okay, and you could play a scalp, maybe a T1 here, maybe a T2 back up to the bottom of this, right? But you got to remember, this is something I want to show you. In real time, that's all you see. You notice this? That's all you see in real time. So your decision making has to be sharp. Anybody who's new that's watching this, that maybe you've only joined the room in the last few days or whatever, when I say you got to use common sense and you got to use overall context, right? I'd much rather see a hammer here, bigger wick, no topping wick or a smaller topping wick. Then if I see that, because remember, I don't know anything else. I can't see anything else. If this would be real time, then I would be saying, yeah, this is a high probability play. If I saw this in real time, okay, we know it works out, right? We know it works out, but you wouldn't have known that right here. And would you have thought this would be as high a probability play as if we had a nice hammer with a wick that maybe came down to about here? Does that make sense? Okay, and then if I come down, where's it at? Then I can move candle by candle. All right, but we already know, hindsight, that it did work out. Okay, there's a little bit of confirmation there, right? Because we came down right into, we had a spinning top after a sharp move down at a support level, right? These just aren't as high probability as if that was a hammer. That's all I'm saying. Okay, it did work out, right? It did work out. Let's look at the diamonds. This is the ETF of the Dow Jones. Okay, big gap down, but it's not doing a whole lot. Big gap down up to the 200, right? But it's not moving a whole lot, is all I'm saying. All right? That's a big gap to try to fill. Big gap. Let's look at Euro USD. We're just kind of working down through here. All right, Euro USD still moving down, right? Now, let's think about this. Does it make sense that Euro USD has been trending down? Does that make sense? We can even come back a few more days. Okay, it was working its way up. Now it's trending down over, starting here, 1, 2, 3. So the past 3 days, it's trending down. Does that make sense? It depends. Okay, now in normal volatility, now remember, this is forex, and the only way that it's really affected by what's going on in the stock market is the strength or weakness of the dollar, right? Because it's the dollar against the euro. Now the euro has been weak itself, right? So that's where you can get kind of tripped up. Now this move to me definitely made sense right up through here. Why? Okay, why would that move make sense? what has been happening recently, right? The dollar has been getting weaker and weaker and weaker. So even though the euro was weak, it was moving up because the dollar was getting weaker. Now we're moving back down, and I'm not saying the dollar is stronger, but now the euro is obviously weaker. There's a lot of stuff going on in Europe. The prime minister, right, has coronavirus. Okay, their currency has been weakening. Italy and some of the countries over there were decimated by the coronavirus. All right, so does it make sense? Sort of, right? But those are things when you're trading forex, you got to keep that in mind, right? A currency pair, you're taking the relative strength or weakness of the euro, in this case, versus the dollar. When it's moving up, that's basically saying the euro is stronger than the dollar. When it's moving down, it's saying that the euro is weaker than the dollar. Okay, so keep that in mind. Let's look at Facebook. Okay, gap down, but right under resistance. Tried up, couldn't get through it. It's trying again. Will it get through this time? Possibly. All right, now we just had an alert on the market, so let's go see. I think it's moving up. Okay, yep. So let's squeeze in. Okay, so now we're trying to break the top of the structure level. Still need to get above this wick right here. We still need to get above that. So I'll put an alert right up here. But that alert that just went off was telling us that we had broken the top of the structure level. Okay, now I have an alert up here. It's right at the top of the wick. We'll have to see if we can get through. We'll have to see if we can get through, if it gets up there. All right. So here, look at this. This is opening price level. Where has all of our price action been so far? It's been up, right? So we tried to go a little bit lower at the beginning. Not as big a fake out as we would normally see, right? Normally, the opening move, we know it's almost always the opposite, but normally it's a little bit bigger. Then it'll reverse and start going the direction that big money really wanted it to go anyway. But we can easily see, that's why we draw this in, all the price action so far. Okay, we're getting close to being an hour and 30 minutes in, has been above. Right? Now this was pretty whippy right here. This was pretty whippy, and that's why we ended up with a spinning top. But now we're trying to move up. We're trying to take the top of this out. We just took the top of that out. Can we clear this wick? If we can clear this one, then we have this one right over here. Those are your potential obstacles, here and here. Get above there. I've told you this at the beginning. Okay, then it gets pretty easy to maybe get up to this level. All right, let's keep looking at some other things. We have alerts set. Let's see if we see anything interesting. Let's look at gold. This is the miners fund. All right, and it's moving up. Okay, I told you gold was one of the few things that wasn't down significantly. It did gap down just slightly, see that? All right, but it was relatively flat most of the morning when all the equity names were gapping down big time. And look at the strength that gold is showing this morning. Okay, see the strength here? Got up here. Now we weren't watching it live. We don't know if it had any problem with that wick or not. We don't know if it, because we weren't watching it in real time. You see this 200 here? Okay, now to me, this is really showing strength. And why is that? Because it broke through 1, 2, 3, 4 levels of resistance. Right? That's how we know if something is really strong. Because how many times have we been on one of these live streams and we watch when there's multiple levels of resistance, something gets up in there, it kind of bangs around for a while, and then it sells away. Okay, so this would have been level 1. Level 2 would be this. Level 3 would be the 200. Level 4 would be the 20. It's already broken through 4 levels of resistance. And it's still going. Look at that. It's still going. So gold, right now, this is GDX. Gold is strong this morning. If it clears and holds above here, obviously, look at this. It's got some room to run. Anybody who was trading this today is probably really, really happy. Now, there was no signal for us. Well, let's go back and look. I don't know. Let's look at the daily. No. Okay, we did not have an inside candle. We didn't have a hammer yesterday, something like that. So let me show you this. Let's say that we got this move down, we're on the daily, and this is a hammer. Yesterday ended as a hammer after 4 days. That, taking out the top of it, would absolutely be a trade to the upside. Be a phenomenal trade to the upside. All right, if you had 4 days this way, and imagine that wick's not there, and you have a nice long wick here, maybe it came down and bounced off of there, nice long wick on the daily, that'd be an incredible, incredible signal and setup. Okay, but it's showing strength no matter what. It's showing strength anyway. Okay, it's still up here. This is on the daily. Okay, if we go back to the 30, okay, still going. So it did break above here, right? When we left, we were just above here. Still going. There should not be much resistance until it gets up to the top of here. Doesn't mean that it can't be turned down, right? Sellers can come in at any time, but we are clearing all of this junk in here and just going. Man, this thing is going today. All right, let's look at gold, GLD, the ETF of gold. We'll see where it came from. Okay, came from up here, ranged sideways, broke down. Now we'll squeeze it in. Okay, most of the gold names move very similarly, so you're seeing strength here. But other than this wick, there wasn't as much resistance here. Okay, this wick would have been its resistance. So that's why you see this. It came up, kind of came back down. I'll bet you in real time, probably came up here and probably even came back a ways. Then on the next candle, it even flushed down, then came back up, and now it's going higher. Okay, so it's already cleared here. So now you're looking at the top of this candle and then the 20. Top of this candle and the 20. Those would be its next obstacles if it doesn't pull back here. Let me get to the top of this. Okay, so it is pulling back a little bit. This would have been a level it needed to get over, and right now it's almost even with it. Okay. But if it gets up here and kind of keeps moving on, then you're looking at the top of this candle and then the 20. All right, so gold is strong this morning, even though a lot of things are weak. Google. Okay, not a whole lot. All right, gap down, sold down, came back up to the 200, and now it's just sort of hanging out right in here. So it's flat, right? Because that's where it opened. Sort of flat. It's showing that it's down, but that's because of the gap. Let's look at Microsoft. Okay, gap down. It's moving up, right? That's a pretty good move. We would expect to see some resistance right in here. This is on the 30-minute. We've got some supply that it probably would not get to today. I mean, if it did, that'd be one heck of a move. I can guarantee you, I already have an alert set. I can guarantee you, and I don't make guarantees, If somehow we spiked all the way up there today, let's go back and see, is that even reasonable? Probably not. No, it's not really. Look at the biggest candles on the screen. Even the biggest candles on the screen wouldn't get us there. But I'm just telling you, if for some reason there was some dramatic spike and we got up here, that would be the short of a lifetime. Why? Buyers would be totally exhausted and they would hit this really nice supply zone, strong move up, base, strong move away, okay? So that's a good supply zone. And if they got up there, they would be exhausted. They would hit this. I would almost guarantee you would see a massive sell-off. Okay, but it's a little bit too far extended. These are like the biggest candles you see on the screen. That wouldn't get us up there, right? That would maybe get you up in here, okay? And it probably would see some resistance right there, right? This is not necessarily a supply zone like it is up here, but you do have a little bit of a rally base drop right across there. So even if it did get up to there, which would be a stretch, you'd probably see a sell-off. These are the things to look for though, right? Like you need to plan those out in your head in advance. So let's just say that this move started a little bit closer and now you took like a biggest candle on the screen and you could say, oh man, that might get me there. If we really spike up and we get to this nice, strong, fresh supply zone, buyers would probably be exhausted, and I could expect the likelihood would be a big sell-off out of there. All right, so those are the kind of things you want to look for. All right, Netflix. See what we're doing on Netflix. Netflix actually gapped up. Look at that. Here was a close yesterday, just barely, but gapped up, went up, and then it sold down back here to support, and it's just sort of hanging out down here. That's interesting. That's interesting. I don't know if it had news or not. I don't know. Maybe it had some kind of news that helped it to gap up instead of down like everything else. Okay, and we're still under supply. We've been trending up out of this demand area right here. Okay, we came down into demand. I really need to, I'm sorry. This is new demand down here. It was created right here. Strong move down. This would be your base, okay, and then left strong. I would like to have seen continuation. Okay, that's a strong way to leave. That candle was a $13 candle. Okay, that's a strong way to leave, but you would like to see another green candle or two to continue. We kind of went up, based across here, and then went up. All right, but I drew it in because I do think when it gets down here, we'd probably see some sort of bounce. Let me extend it across while I'm thinking about it. Okay, because it might be a while before we get back down here again. All right, so got this down here, we got this up here. If we get up here, then we'd be expecting to bounce down, depending on what's going on, using our filter. Oh, okay. Somebody, I think it was Todd Father, asked me a question yesterday via DM, and he was absolutely correct. He noticed that I had my RSI, I had changed the setting to simple instead of Wilders. Wilders is the default setting. I had changed it, and I never moved it back. Not from what my friend had told us to try here with the 60-40. The only thing that he changed, the default settings are 14, 70, 30, and then Wilders. That's the default setting on an RSI. That other forex scalper who recommended trying the his was like a 6-day, and it was like 80-20, and then he had said he uses simple instead of the default setting. I had never changed it back. Todd Father caught that. So Todd Father, if you're still in here, great job. And he was like, hey, I noticed if you change it to the default setting, which is Wilder's, that it changes. It's not dramatic. And like I had told him, once I changed it back and forth a couple of times. The Wilder's is actually a little bit smoother than the simple setting was. So the simple setting had a little bit more like up and down type moves, and the Wilder's was a little bit smoother. But make sure if you're doing this, if you're kind of doing this test with me, right here's your settings: 13, 60, 40, and then Wilder's. All right. So again, Todd Father, that was a great catch. So I've changed mine because it does change. I went back. I didn't like go back and back test everything I had already back tested. I didn't do that, but I went back on a few trades that the when I had it changed to simple said don't take, and there were a couple that when it was changed to Wilder's we should have took, and they would have been good trades. Okay, so it did make a difference on at least a couple of them, but I didn't go all the way back and back test everything I'd already tested. But from this point forward, I'm going to see, what we get now that I have it correct there. So just remember, when you make changes on your studies, right, whatever platform you're using, make sure that if you're going to go and change it to something else, that you go back and start with the default settings and then make the changes. And I just had forgot to change it from simple back to Wilder's. So that was a great catch. Okay, so again, here we are on Netflix. It's sold off. Okay, we're down $5 and something on the day, but there really was no signal there. There really was no signal. I don't think, let's go to the daily and we'll make sure. No, we did not have an inside candle yesterday, and that's not a hammer. Okay. So far, we're inside today. Like if we catch support here and then we just kind of stay inside, this may end up as an inside candle today, and that could be a signal for tomorrow. Okay, let's go to Northrop. First of all, we'll see what it's doing on the daily. We did not have an inside, gap down, and it's showing strength. Okay, now let's look at the 30-minute. Did we have any signals on the 30-minute? Not really. Okay, not really, but it's showing some strength. Right? Let's look at the 1 hour because we are past the 1 hour point now. Nothing really there. Okay, not a high probability signal. Okay, you may look at that and say, well, it's obviously moving up. Well, yeah, but where would the high probability entry be? We wouldn't have had one, right? We don't want to just roll the dice. Okay, you roll the dice, you're going to end up losing more than you win. Okay, but now that you're past 1 hour, any of these names we look at, you can look at the hourly and say, do we have a signal? Okay, this could be a potential signal on the hourly. Okay, this is NVIDIA, strong move down to a doji, right? A doji's indecision. So you could put an alert right there at the top. If you take that out, that could be a scalp. Does it give you enough reward to risk? Right? Here is your first level, and it's kind of double, right? Because we got the 20 and we have a resistance area. So the top of this candle, we'll just do the math, 259.32. So you'd probably enter at about 259.34. Well, that'd get you $2, right? That'd get you $2 just up to here. All right, and then maybe that's your T1, and then maybe a T2 would be the top of this candle, which is 263.51. That would get you $2 more. So that'd be like a $4 move, again, if that occurred. Yeah, absolutely, Steve, you could. Okay, but look what you got right here. You got the 200 just below. So factor in your risk reward to risk. So obviously Steve's question is could you also take it the other way? So let's say it reversed and it takes it out right here. Okay, a couple of things. Again, I'm just trying to get you to think about the probabilities here. If we reverse, we've got to travel this distance first, which would be, okay, 251. And we're up here at 257. So we got to travel $6 to get there. Then we have to take it out. Then we have something that is typically going to act as resistance just below, and that's at 250. So from the bottom of this, which is 251.71 to 250.40, just say 250.40. So that's a $1.30 move, but to get there, you got to travel $6 down. And then you're going to enter, and you might be able to get $1.30 out of it. What's the probabilities look like on that? And is the reward to risk something you're willing to accept from here to here? Now up here, $2, that's probably more something acceptable. And then obviously if you got up here, it's $4. So again, and we have the strong move down. And if we start back the other way, right, this could be a reversal and back up. Maybe not all the way up to here. Okay, maybe it's just you get up into here and then you start down again. All right, does that make sense, Steve? Again, I'm not saying you can't take it, right? You could. But start factoring all that stuff in your head. Okay, know where you're at right now. Know what it would take to get down here. And then once you take this out, where's your first likely area of resistance or support? It's right here. We already figured it out, $1.30. So would price be somewhat exhausted by the time it got here? And even if it took it out? Maybe, right? Maybe. So personal opinion, I wouldn't do it. But again, I'm not saying that you can't. Who knows, right? It may get down here and, well, what are some of the biggest candles? That's always a good thing to do. All right, what are some of the biggest candles on the screen? Let's see, high and low. This one was $8. High and low. This one was $10. I'm just giving rough numbers here. High and low. This one was $14. Okay, so could it come all the way back through here, take this out, break this, and get down to here? Well, let's look. Highly unlikely, because this is the biggest candle on the screen. Okay, that's from top to bottom, that's a $14 candle. But let's just draw it across here. If we drew it across there, it's somewhere, okay, the body part of it somewhere up around here. I don't know. I'm just going to say it would be highly unlikely. Is it possible? Yes. Highly unlikely, though, to get through this and get all the way down here after it's been up and come back down. It would be creating the biggest candle on the screen. Okay, let's look at Pepsi. So Pepsi has sold off since the other day, right? Okay, Pepsi is now turned over, came down. Now it's making a rebound though. Look at this, making a rebound. Okay, we're now climbing. Let's go back. I had an alert. We're climbing again on the market. Just had an alert go off. Okay, so the alert was taking this wick out. I said we'd set that alert. Okay, so now we just took this one out. Now, can we take this one out? That's the next one. So we are still moving up on the market. I'll put an alert in. Okay, and if we're still on here, we're kind of about the time we usually get off of here, but if we get up to here, this alert will go off, right? So the market, It's not showing those big chaotic candles that we've had here in the recent past, but this is a pretty steady climb. All right, we're only an hour and 40 minutes in. Let's see where we came from. We opened up at 24.74.75, so just say 24.75. And currently we're at 25.09, so $34. Yeah, that's not bad, right? Okay, now that's more like what a normal day before all of this madness started used to be. We talked about it. Remember, I told you the average daily range before the market correction was somewhere around $44 to $47. Okay, total range up and down, $44 to $47. So, like, let's just say we kind of got up in here and then we turned around and came back down or whatever. That's more of a normal day. If you only have about a $50 range or less, that's more normal than it's been in a long time. Not saying that's going to happen. I mean, obviously, anything can happen. We could get up and blow through here, and like if we got above here, look at this setup. Let me drag it across so you can see it better. In fact, I'll make it a little bit tighter. AMD is still going. We'll go back and look at it here in a minute. All right. Let's just say you cleared this 20 and you cleared this. Look at this. Look at that setup. Man, you could just really start to go. All right, look at that. That's a beautiful setup. This is the 1 hour I'm on right now. Okay, so is the possibility there? Yeah, for sure. But we've got this coming up. And we've got this level coming up if it keeps moving to the upside. Okay, let's go look at AMD. I'm going to switch back to the 30-minute. Okay, because that alert meant that we're still climbing on AMD. Okay, so that alert was telling us we would have hit T2, right? Because it was at the top of these two candles. We got above it. Look where it stopped. Right at the 20. Right at the 20. Okay, so T1 would have been this level, okay, on this kind of a price action trade. T2 would have been right here. Oh, actually, that was T3. That's right. We already took out T2. That was T3. We were seeing is it going to go higher? Is it going to go higher? So it's now clear up here. Then it went right to the 20 and has pulled back. So from here, 46.74 from 44.70. Yeah. So up here, $2 move. This was $1. This was like $1.70. Now this is like $2. So good move right there. Good move on a nice price action play. These are the kind of plays you're looking for with price action. And you would have got a $2 move on AMD, which is a good move for AMD, right? Look at the candles. All you got to do is look at the average size candles, right? This candle is the biggest candle on the screen. So on AMD, that was a moneymaker because look at the average candles. See these? These are all the average size candles. These are the bigger candles, okay, until you got that. Biggest candle on the screen. That's always nice when the biggest candle on the screen is part of your move, right? That's always fantastic. Okay. Does anybody have any questions before we get off of here today? Okay, we're sort of over what we normally do, but I'm more than happy to answer anything. I've got nowhere to be. We're in home quarantine, so I'm not going anywhere. Usually when we get off of here, I grab some lunch, and then if the weather's good, I usually maybe go take a walk or something. But I've definitely got time in case somebody needs anything. If you have a question about anything we've talked about in the room, question about any notes, question about a symbol, I'm free to answer anything for you. I'll wait here just a minute or so and see if anybody has anything. I'm going to go back and look at GDX, see if it's still climbing. Nope. Nope. It's sort of pulling back a little bit. Steve, we do this instead so you can see what I'm doing, right? We did used to get on the audio channel, but then other than snapshots, nobody can see what I'm talking about. So we started doing the live streams because you can see my screen in real time while I'm talking to you. So we stopped doing the audios because you can't see what I'm talking about. The only way you can see is for me to just keep snapshotting stuff. This is so much easier and so much more fluid. Okay, awesome, awesome. Yeah, good question. Hey, look at this on GDX. Could be forming a W pattern. Look at that. See it? Right here. Okay, they're not always perfect, right? It's not going to be here, and you notice we went a little bit below there, but you can visually see it. W's are just the inverse of a double top, right? It's like a double bottom. Okay, a double top looks like an M and moves down. So if this gets taken out here, let's look. Okay, if that gets taken out, this could be a potential area of resistance, and then right up here you would probably catch some resistance because strong move up, base, and then a decent move away. I would like to see that candle be similar in size to that. Oh, that reminds me. I wanted to talk to you guys about supply and demand. So there's been a lot of people have DM'd me. Some people have asked stuff in the room. Everybody wants to know how to draw the best zones, right? And I've even told you, I said it last night. Myself, I even get caught up in trying to be over eager to draw more zones than are what are really there. Okay, so the most important things, okay, for the strongest zones, follow me. And I know it's in the notes, but follow me. Rally, base, drop. But of those three things, the most important thing is the drop. Okay, that's for supply. For demand, drop, base, rally. The most important thing of those three for demand is the rally. So here, see how we have this big, wide-ranging green candle? I'll come in closer. We have this big, wide-ranging green candle. Then there's our base, and then we have this drop away. Now, yes, that's a nice drop away, but we would really like to see it reversed. We would like to see this candle over here. Okay, and we'd like to see the climb maybe look more like this. Okay, then the base. Ideally, we'd like to see at least 2 candles in the base. 2 to 6 is like perfect, but 1 is okay, right? So if we had this on this side and then this candle leaving the zone, that would be even better. Okay, that's what you're looking for. Okay, so when you're scanning through things, when you're looking at the names you trade and you're wanting to draw in some strong, fresh supply zones, those are primarily what you're looking for the strongest ones. Okay, rally, base, strong drop away, or drop, base, strong rally away. You want those first 1 or 2 candles to kind of look like this, right here. You want it to be one of the bigger candles on the screen, or at worst, you want to see like maybe a candle like this here, like 3 of those in a row. Not like 1 and then a little one and then maybe something like this and then 1. Like here, this is okay, right? Again, I'm just saying this isn't the strongest, right? That's not the strongest. If this was reversed, if you had a nice steady climb, then your base, and then a candle like that leaving, and then maybe even followed up by a candle like this, and then you start getting smaller, that would be even better. Okay, so when you're creating supply, the most important thing is how it leaves, because that's showing you the strength of the sellers. That's what supply is about. In demand, the most important thing is how it leaves going up, because that's showing you the strength of the buyers. Right? Does everybody understand that? Because I know I've had tons of questions. Several of you have just DM'd me privately, which is fine. You know, anytime you don't feel comfortable about something in the room, you can obviously DM me, but I want you to know nobody judges here. Nobody judges. So when you put something in the room, don't ever feel like, oh my gosh, I'm being stupid for asking this. No, right? Everybody's here to learn. And here's the funny thing. That's why I wanted to cover this. Several of you have DM'd me privately asking me about that. A couple people have put it in there publicly. Right? You know, what makes a strong level? What's a fresh level? Okay, now this is going to be a horrible example, but I'm just trying to show you how you can determine whether something's fresh or not. All right, let's just say that this isn't a zone, but I'm gonna do this to show you. Let's say this was a supply zone. Let me draw it in. Okay, it's not. I want you to know that it's not, but I'm doing it for the sake of this this demonstration. Let me make it pink, and then I'm going to show you how to know if something is fresh or not. All right, so we're saying that this is a supply zone. Now it just got tested, right? Okay, now it just got tested and it's sold away. Okay, now first of all, this is what you want to see, right? You want to see that it come up into supply and then it sells away strongly, because you're going to look to go short there and you want to catch some of this. Here's how you know if something's fresh, or where to draw in that next zone. If, again, this is not, but I'm just saying, if this was a supply zone, this action came up in there, okay, it's the test and then it sells away, you cannot use this as a new supply zone. So you would not then draw this. Okay? Now that would be pink, obviously. You would not draw it if it is what took out a different zone. Okay, I hope everybody follows me on that. Okay, because sometimes people have these like never-ending zones that go across, and it's where price had come back in and left and come back in and left. This is not a supply zone if it took out another supply zone. This would not be considered fresh. Why? Okay, think about it. It's because, again, if this truly was a supply zone, the strong move away was because there was a lot more sellers up here than buyers, aggressive, more unfulfilled sell orders. Then it comes back and gets tested and moves away. Well, some of those orders are being fulfilled then. Right? Every time you come back in through here, or if you move through there, that means all the orders have been fulfilled. Okay? So this then cannot be a new, fresh supply zone. Now I will say this. That does not mean that if price came back up in here, it might not bounce again. It could, but the probabilities are so significantly decreased. So you don't want to draw that in. Does that make sense to everybody? If what you're looking at took out another zone, you don't draw a new zone in off of here. Here is where it changes. Now, if this comes back up and forms a rally base drop again, now you can draw it in. Not here, but if it does it again, now you can draw it in, but not here. All right? However, I'm just proving a point. This is not really a supply zone. This one should be decent. Okay? Should be decent. The only thing different is I would much rather see it leave with a candle like that first, and then they could get smaller. Okay, I am going to draw it in. Let me drag this across, and we'll change it to pink. Okay, I am going to draw this in. And then we'll see when it gets back up to it how strong it really is, but it should be decent. Okay, Al, I'm glad that makes sense to you. Let me change this to pink. Hopefully it makes sense to everybody. Okay, coming back across. I'll stretch it out later. All right, but if we do form a W pattern here and eventually get back up here, then we would look for a bounce back down the first time. And that would make sense on a W pattern too. Usually the first time you get back up to where it originated, the first time it's usually going to bounce. Okay, it might only come down like this far and then go higher. Or it may come up and hit there and just start a new pattern on down. All right, so we're kind of combining a couple of things here. Supply and demand and a candlestick pattern. Okay, W's and M's, which would be a double top, form frequently. All right, so we know we're trying to keep it in mind. I'm going to set an alert up here. Let me see what my zone is, 25.13, so I need my alert at about 25.12. And I'm going to put my note, look to go short. So if that alert goes off, right there, I'm going to immediately start doing some quick analysis. And I'm going to look at previous price action. I'll look at some other things. I'll look at our filter, see where our filter is. I'll put it all together if that alert goes off, and then I'll think, okay, does it make sense for me to go short here? And if it does, where would my target be? All right? Okay, guys, that's all I have. Nobody else is asking any questions, but I definitely wanted to cover that because that was a frequently asked topic over the last few days. So guys, have a great day. I'll be in and out of the room during the afternoon. I'll obviously be more in there towards the end of the day. I'm going to go grab some lunch, maybe go for a walk. I think looks sunny out today. I know it's a little bit cooler. We got up into the 80s for 2 or 3 days, and now today I think the high is supposed to be about 60, but that's good walking weather. So I'll see everybody in the room. Talk to you later.